All roads lead to Rome, or in other words, there are many approaches that can lead to the same result. When we time Bitcoin, when we try to buy Bitcoin low and we sell it high, there are many approaches that I believe work. What is important with those approaches is that they are testable, that they can be back tested, that we can actually figure out and quantify how good does an approach work. What I don't think is good is to simply just use gut feel, because unfortunately the best time to buy is when it doesn't feel that great, and the best time to sell is when everybody is super euphoric. Now there's one way to time the Bitcoin market that I've talked about several times on this channel, and that is following the trend. That is buying in whenever the price is above a moving average and selling or going even short whenever price is below the moving average. And when we backtest various different moving averages, we find out that the 120-day simple moving average is the one that historically during Bitcoin's entire existence worked the best. So some people take the 200-day moving average, some people take the 100-day, others take the 50-day or the 21-day. I've backtested all of those moving averages, and quantifiably the 120-day is the best. And so that's what I like to use. And that's why I bought in very heavily at the beginning of 2023 when we were still below 20k. And it was also the reason why I sold quite heavily at the end of 2021. Now currently the price is above that moving average. In other words, just according to the backtest, we should still be bullish. If you want to learn about the technical details of this 120-day simple moving average backtest, then feel free to check out this video here. It has been published 4 days ago. It's simply titled, "I Need to Say This." Feel free to check that out. Here's an overview of the result. We see that the 120-day SMA tended to work the best. Now there is a bit of a problem with that strategy. And that problem is that it's a trend following strategy and thus sometimes a bit laggy. For example, when we are in a bear market and then we turn back bullish again, we're never really buying the bottom, right? We tend to buy after we've already hit the bottom. It feels like we're already late to the party. We are already up by 14% before we buy in. And the same is true the other way around, right? Let's say this current bull market has already ended. Nobody knows, but let's say that's the case. Then we would be selling at around 75k, maybe a bit higher because the moving average is now rising, but we would be selling around the 70k mark when there was an opportunity to sell at 106k. So we're waiting for a drop of 29% before actually turning bearish. Now, depending on how heavily we are invested in Bitcoin, a drop of 28% might not be that nice. And so let's work with the assumption that we are currently very heavily exposed and that we don't want to see that much of a retracement. Is there an approach to sell potentially earlier? Or in other words, is there a way to detect when we tend to be topping out before crossing? When are we especially heated? Now, one potential approach could be to simply measure the distance from the moving average. So when we are still relatively close to the moving average, we might have a somewhat healthy rally. But when the current price is already almost 60% above the moving average, maybe it might make sense to take some chips off the table. Let's have a look at the delta between the 120-day simple moving average and the price over time. Maybe there's some kind of structure. Have a look at the following. What you've got here at the bottom is the difference between the current price and the moving average expressed as a multiple X. So here in November 2013, the price was 4 times as high as the moving average. Then we came back down, then we recovered again, we came back down, etc. It seems like over the long term, those tops tend to be somewhat aligning on a curved line. If we take this curved line as the absolute maximum when it makes sense to sell, then right now, if we extend this to the current levels, it would be at somewhere between 1.3, maybe 1.4 times above the moving average. Now, where is the moving average currently? Where is the 120-day? It's at 75,600 roughly. And so that would bring us to an absolute top of Bitcoin of 181,000 right now. That would be the absolute top in case we suddenly start a massive rally. It was the best exit opportunities in the past. We would have sold at 20k at the end of 2017, we would have sold at 40k at the beginning of 2021, and a similar kind of peak that only happens every 3 to 4 years would now be in the 180k realm. So somewhere around here. Let's say we want to sell a bit earlier. Let's say we don't just wait for selling opportunities that happen every 3 to 4 years. We want to take some chips off the table a bit earlier. Where is a potential exit? Again, we can have a look at where recently the tops aligned, and it seems like this vertical line here is relatively representative of how much the price extended from the moving average, and we've just hit that, unfortunately. So it's 50% above the moving average. That was on the 21st of November. That's when the price was at 98k. Now I like this approach quite a bit because it shows us exaggerations in the price, right? When we already have positive momentum, when the moving average is already rising and we're rising that much quicker than the moving average, then at some point there must be a buyer's exhaustion. People's funds are not unlimited, so you can't buy Bitcoin forever, and also the growth of new investors has somewhat of a limit. We can't like double or triple in the number of investors in just a few days. So there's a maximum of how quickly the market can expand, and there's also a maximum of how much people can be deployed in the market. And the delta of the current price to the moving average is a quite nice quantitative way to figure out how heated we potentially might be. And if you take just the last 3 years as a reference point, we had been very, very high 1 month ago. But we are now slowing somewhat down, right? The delta between the moving average and the price is going down because the moving average continues to go up. The price is going sideways, the moving average is going up, the market is cooling off. And so there has been more time for people to save more money to deploy this, or for new people to enter the space. Now again, this moving average works the best simply as a buying and selling indicator. In other words, we want to be bullish whenever the price is above. We want to be then very much exposed to Bitcoin, and we want to be cautious whenever we are below. The ideal time to buy is when we are relatively close to the moving average, because then we are neither very heated nor very bearish. Of course, we then do have sometimes our failed signals, right? We might buy in, to sell again, to buy back in. The direction isn't clear, but once we do see our breakout, then the trend is your friend. And so this gives us also a reference point of how much the price could go down for us still to be in a bull market. So even if Bitcoin was to go down now by 20% and we were to hit the 76k, right? We are not yet below the moving average. We're just slightly above it. Even then, according to trend following strategies, we'd still be bullish. Only once we fall below, that's when we get bearish. Now, if you are that much exposed to crypto right now that you would get totally wrecked if Bitcoin goes down by 10 or 15%, then probably it makes sense to take some chips off the table. Because currently we are still at very similar levels to the time when selling was very profitable. We only went down by 3% since then. If your dollar cost averaged into Bitcoin, you bought more and more, and now you're up by 500%, then I believe there's really no harm in taking some profit. There's no need to sell everything, but still, in the end, it is a game of buying low and selling high. And of course, we can simply just ride the waves and we can work through the 70% declines. But if you don't want to hold Bitcoin during those declines, then we have to exit at some point. And currently, the exit prices aren't still too bad. Now, here's the thing. There are plenty of topics within crypto that aren't very sexy, but that are, I believe, very vital to make money long term. For example, concepts like correlation. What we see over here are correlation coefficients. Did you know, for example, that most altcoins tend to be more correlated with Ethereum than with Bitcoin? In other words, it's not when Bitcoin goes up that the altcoins go up as well. It's rather when Ethereum goes up, then the altcoins go up as well. Or did you know that the correlation coefficient of the S&P 500 to Ethereum, and thus the altcoin market, is actually quite volatile? In other words, it does make sense to also own stocks, not just Ethereum, not just crypto. The common narrative is that when traditional markets go down, that crypto tends to go down as well, right? That crypto is simply just a levered bet on, say, technology stocks. That's not the case. The correlation coefficient is relatively close to zero. Or do you know the long-term expected returns of various asset classes, of, say, gold, of say the S&P 500, of Bitcoin, of altcoins. When we don't just own crypto, but we also own property, for example, and we've got that portfolio, what kind of returns do we need in order to beat monetary debasement, but also in order to at some point to get financially free? How much money do we need to have enough passive income to not having to work anymore? What are expected long-term returns, and how much should we actually allocate towards crypto and towards property, towards stocks, gold, bond, etc.? What actually makes sense? When there are tens of thousands, hundreds of thousands, maybe even millions of dollars on the line, not having this properly nailed down is a huge problem. And when the market isn't that great anymore and the upside for Bitcoin could be somewhat limited, how can we still make money? How can we make money from charts like this? What we see over here is Balancer relative to Ethereum. We can make money by shorting this. Balancer has very bad tokenomics, the supply increases over time, and so it tends to do worse than Bitcoin and Ethereum over the long term. And we can make money from that, again, from the relative valuations, not just from US dollar valuations. When we look at how quickly is the monetary base expanding, and we put this into relationship to how quickly are salaries increasing, we actually see that pretty much everybody is falling behind over time. And this is not just true for the poor people, this is even true for the top 5% of earners. By the way, if you earn $500,000 per year, then you are in the top 5%. But yeah, data like this is useful. And those are not necessarily the sexy topics that work well on YouTube, right? On YouTube, it's the 100x altcoin gems that get all the clicks. But when you talk about diversification and correlation, etc., people just fall asleep. But it's the long-term planning, the long-term proper allocation towards different asset classes that actually make the difference. And so have a look at all of this. Those are tutorial videos of the premium membership of this channel. It's down below, thebitcointrader.com. There's more than 100 tutorial videos in total. What are my favorite crypto macro indicators? How do interest rates impact different asset classes? We've just seen how the market got spooked because the Federal Reserve might get more hawkish. Or how do we adjust our returns for risk mathematically, right? Everybody can get more returns by increasing the risk massively, but the idea is we want to get the best returns for the risk. And so there are ways to calculate this using alpha and beta. Those are all very complex topics, but I strongly believe that it's the skilled people, the people that have most knowledge, that tend to make most money over time. Now, besides all of those tutorial videos, there are also various chats in premium where I try to be active as well. So in case you've got any questions, just tag me in a message in those premium chats and I try to reply. The membership is currently $165 per month. This is not for people that only have a net worth of $1,000, right? This is for people that actually have to manage wealth in the tens of thousands, preferably even hundreds of thousands of dollars. There is a 1-week money back guarantee as well. So in case you don't like premium, just message me within the first week and I refund you 100%. There's really zero risk for you. Now, if it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.